The United States Consumer Price Index, CPI, data released today gave insight into the current economic state. The data showed minimal inflation overall, which was a result of lower energy and apparel costs. Core CPI, which excludes volatile energy and food prices, also came in lower than expected. The data pointed to moderating price volatility for the immediate future, which suggests a period of economic stability. Despite that, there were a few sectors that did show increased inflation. New vehicle prices were up 0.3% from the previous month, while used car prices were up 0.5%. Most services were also up, with medical care, personal care services, and communication all showing increases. The CPI data points to the current trend of steady, manageable inflation. This trend has been seen in the last few releases, reinforcing the idea of a period of consistent economic growth. There were even several sectors that showed deflationary pressures, including apparel, lodging away from home, and recreation. This deflationary trend could portend a larger dip in the overall rate of inflation going forward. Analysts are expecting the CPI release to remain relatively flat for the next month or two. This news should come as a relief to many investors and economists, who were fearful of a large spike in inflation. The data points to a period of economic stability, which bodes well for the future of the American economy. The CPI data released today should reassure both those in the financial markets and households looking for signs of economic security. Lower energy and apparel prices drive overall CPI lower, while core CPI excluding those prices shows virtually no change. This suggests a period of relative economic stability, and likely moderating inflation in the near future. Despite that, certain areas of the economy did show larger inflationary forces, such as new and used cars. The medical care, personal care services, and communication sectors were also up from the previous month. This data could point to larger inflationary forces in those areas over the course of the next few months. Nonetheless, many economists are expecting the CPI to remain relatively unmoved for the near future. The stabilization of inflation comes as a relief to many, as a large increase could have suggested a possible slowing of the economy. A period of relative economic stability could give the markets more confidence, and spur on economic growth. Deflationary pressures such as those seen in apparel, lodging, and recreation could be a sign of impending decreases to the rate of inflation. Despite that, for now at least, it appears that the American economy is in a strong and secure position.